I love scalping. I just love quick, super quick trades. When I first started learning to trade, it was exactly the way that I wanted to trade. I wanted to get into trades and out of trades quickly. And I wanted to make regular trades, lots of trades. I could see lots of opportunities in the market and I kept getting blown out. But it suited my mentality. I just needed a method for it, and that's what I have now. That's what I teach other people, and that's what I want to show you today. I was scalping the open of the Dow today, and I scalp the open regularly. And I always do the same thing. I follow my strategy, and I'm going to share some of that with you today. So I'm going to show you what I did, what I do, and explain why. Okay, now scalping is, I'd normally expect to be in a scalp trade for 1, 2, or 3 time frames. So if we're talking about minutes, then 3 minutes maximum. And out of recent trades, I looked at an average of over 300 trades. My average time in a trade was about 2.5 minutes. So basically that's effectively what I do. If I want to swing trade, then I'll go to a higher time frame chart. But the Dow Jones has got plenty of volatility. I don't need to sit and think about when to take a trade because it's natural for me now. I know exactly when the right time to take a trade is. So I can do that. And today in particular, I've got some action from the open on the Dow coming up. And today the average true range, the size of a candlestick from top to bottom, was quite large. And that's the best climate for me for scalping. When the average of every bar is 20 points and I've only got maybe a 1 point or just over 1 point spread or charge on the trade, then there's plenty of room to make profits. And it's, if you're going short, it's very difficult to find out and to know when the top of a candlestick is, or the top of a trend is. It's very difficult if you're going long to know when the bottom of a candlestick is, and therefore you're not always, and very rarely, are you going to get the full benefit of all of the high to low or low to high of a candlestick. And so knowing when to enter is important, and I'm going to tell you that now. I'm going to tell you when I enter. And so on the open of any indices that's got lots of volume in it, like the Dow, like the Germany 30, those sort of markets, they tend to be very volatile, and you shouldn't do anything without testing it out first. And trading is a nightmare when you first start because you haven't got a clue what's going on, and therefore you need a proper education. And that's what I got myself. It took me a long time to learn, but I did it, and I've developed my own strategies that I teach people. I teach people what I do, and it works for me. So this is this is the strategy that I use for the Dow. Now, you may already know this, but each candlestick, each time frame in any market on any chart has 4 levels of support and resistance. Okay, 4 levels of support and resistance. It's got the open, the close, the high, and the low. Now think about this in terms of support and resistance, because I use them for my scalping strategies. Okay, think about this. Let's say a candlestick opens here, goes down a little bit, so that's a red bit, and then goes back up. Okay, now you've got 2 bits of support and resistance on the chart at the moment. You've got the open and you've got the low. Okay, the price then goes up, turns green, right? It turns green. As soon as it turns green, that's in a uptrend. At the right time, in a good context moment, that's a good time to go long, and the candle turns green and hopefully shoots up. And so then you've got a high, a growing high, and that will provide resistance. Okay, but because it's in an uptrend, the resistance levels keep getting broken and you get new highs. Okay, and then you get a close. Let's say it closes here. Okay, so that then provides for the next time frame support and resistance again. Now, thinking about it, if a candlestick opens here, goes down slightly and then goes up and above where it opened, you've then got two levels of support. Okay, so if you enter a trade here, two levels of support. So if the market starts going down, the candlestick goes down, it could bounce off the first level of support or the second level of support. And that's why it's a good time to take a trade, because you've got support between where you entered the trade and a potential loss. Okay, you've got to get the odds in your favor. And very often you find that the market will jump upwards. If you're scalping, you take your profit quickly and you're done. And that works. That works for me under the right circumstances. Now, I always say you need context, content, and confluence for a trade. And this is content. It's content in terms of the candlesticks. Now, just imagine in the scenario I gave you, opens here, goes down, goes up, and then you've got a green candlestick. Just imagine if you had an exponential moving average going through here as well as, so it opens just above the exponential moving average, goes down below, goes up. You've now got three levels of support in the way. You've got the open, you've got the exponential moving average, and the low. And that's, about as good a security as you can get for a trade. If it goes down, then you've got to get out. Simple as that. But the odds, it's all about putting the odds in your favour and getting out quickly. Getting out, quickly, and judging when the right time is to get out. Now, on the open of a market, the market moves extremely quickly. There's nothing different about the open than there is about any other time of day, in my view, except the price moves very, very quickly, and when it gets on a run, it tends to burst. And so the ideal time, of course, is to get in just before the burst and get out after the burst, after the bubbles burst. And we'll have a look at that right now. Okay, so we'll have a look at the entry. We'll have a look at the bubble bursting from today, and it hopefully proved my point. Now, if you're interested in trading or scalping, give me a shout. I'm a coach, I'm a professional trainer, so I can probably help you. Let's have a look at this. There's about a minute before the open, and I'm going to play the video in a second. But I just wanted to go through the pre-market price action first of all. And you can see I've got the 1 minute chart on the right. I've got the 5 minute chart on the left. I'll be trading the 1 minute chart. So these are 1 minute candles. Okay. And the completed candles are all these candles. This one is in the process of being completed. Okay. So just having a look at this candle here. This is what I was talking about in terms of the entry. It went down. So it opened here, went down, went up, turned green, and as soon as it turned green, that's a good trading entry long, and obviously paid off. So in that case, you had the open, the low, the 8 EMA in the way of a potential loss. So the market went up, tried to pull back a little bit here, went up, so it went red, green, and did the same here. You can see it went red, green, went right up here and then pulled back. But this is pre-market. Now we're just about to enter, and this is the type of thing that I'll be looking for as an entry. Okay, so this is the minute before an entry. Now on the longer time frame, you're in an uptrend, so I'm only looking for long opportunities here, and so I'll be looking for the market to dip down, and then I'll buy once the candlestick turns green, if that's around about this level here. Okay, we've got value here, 8 EMA, 20 EMA. Right, so we've got red. Now green turns green and it's a buy. Okay, the market is open now and we're waiting for green. Look how quickly this happens. Super quick. Right, there we go. That's acting as support there, and green there. That's your entry. Okay, now you can see the open, which is here, acting as support, and there you go. There's your burst, but it's the open. It's the open, so we've got to look for signs that the burst is weakening. You know, we don't want to get out too soon, but basically you had your entry here, you have your stop down here, so you've now got 2, 3 to 1 there now, and it's coming up to a 50 level, so that's your exit there. And so that's what almost always happens. Look, you've got a level range here in an uptrend. Its price is being pushed up by the EMAs. It has to go down and then it bursts upwards. Same thing happened here. Went down and then burst upwards. Level, went down and then bursts upwards. That's the sort of thing you're looking for, and a scalper would be out of this trade. Yes, it's still going up, but who cares? You know, made 2, 3 to 1 on that trade, and you know, with a perfect entry. You've got a large candlestick here that's green. What's the point in still being in this particular trade if you're in it? What's the point? I'm waiting for it to come back to here. I'm waiting for the market to pull back. Almost always quite volatile on the open. You don't just get green candles, you get green and red. And if it comes down here, I'll be looking to get a good entry and potentially go long. If you get a red candlestick that comes right down here and closes down here, then that's no good for long. But look at the entry here as well. You got a pullback below the 8 EMA, pullback in an uptrend, and then the entry was here. So you've actually got some good support levels on the higher time frame chart as well. But my energy and my focus is on the trading time frame. And that's that. So that's me scalping. That's what I do. If you want to know more, give me a shout. I've got trading courses for you guys, and I've got videos and coaching associated with my system if you're interested. My name's Anthony Beardsall. Thanks ever so much for watching. Leave a comment or question if you've got one, and please do subscribe to the channel. Cheers for now. See you on the next video. Bye.